Hello, it's Adil bringing you a review of inter-market analysis of the FTSE 100 for the Wednesday, the 19th of November 2014. Okay, 4 days left before my 32nd birthday, so interesting. November's always interesting. Okay, so let's see what's happened today then. So let's go through the fundamentals first, like we always do. I did call for obviously a down day today, and obviously we did get that to a certain extent. But I'll discuss that in detail. Okay, let's start off with fundamentals. So fundamentals overnight. Okay, the Asian markets were down, as you can see here. Asian market Hang Seng was down by 0.66%. The Nikkei was down, and the Shanghai was down as well, as you can see here. Shanghai down by 0.2%. Hang Seng was down by 0.66%. If my Nikkei is, unless it's updated, yeah, it's gone on back to neutral again, but the Nikkei was down as well. Okay, so the MySex certainly was down today as well. Okay, so basically the FTSE itself finished obviously in the end by minus 12 points, finished up at 6696. Okay, and it held at 6690 level. Now the Asian markets were down overnight, so obviously that's potential risk off scenario. Obviously we did have the FOMC minutes today, and maybe they had access to information that me and you don't know. Okay, because the US markets have not performed as bullish as one would expect. Okay, so where are we then? So how do we interpret this? So basically Asian markets down overnight, so obviously that's risk off from that perspective, given the fact that they are interpreting all the variables that are present at that very moment in time, and they want to sell the market even with Mr. Abe's tax delay and the USD yen almost near 118 now. Okay, so that's interpreted as being bearish. Okay, and that's basically how we see it. Okay, now with regards to the market in terms of the commodities are coming into potential support. Okay, that's something that we're going to discuss very shortly. Okay, now let's have a look at the technical picture then, so if that's the case. Okay, so with regards to fundamentals, one more point I will note as well. The reason why the bias was negative as well was mainly due to the Keystone Pipeline deal being rejected. Obviously that creates jobs, etc., and it's good for the economy in terms of construction and so on and so forth. And given the fact that was rejected, that's obviously had a risk off scenario with regards to the Dow Jones, and that's why the FTSE obviously was coming under pressure as well. Now not only that, we also had the fact that the BOE itself did refer, or did have had reference to certain inflation expectations slightly increasing to 1.3%, so that was the negative bias on the FTSE at that very moment in time as well. Okay, but although the BOE minutes today have certainly changed things around. Okay, right, so the FTSE 100 was into the 200 MA and still remains into the 200 MA technically speaking. Now the BOE minutes today, it's debatable. Okay, the Fed minutes as well, again debatable. Overall, the only way I can interpret the there are differences. Let's just bring up this article here with regards to fundamentals, and this is why it is going to be quite tricky how we interpret this. Really, it's basically upon sterling and how it reacts. But differences over the risks to Britain's economy surfaced this month among the Bank of England, who have voted to keep interest rates on hold, complicating the outlook for monetary policy. Minutes of the monetary policy meeting showed its members voted 7-2 for the fourth month in a row to maintain rates at the record low. Okay, there are material spread of views among the majority of minutes sending sterling up against the dollar and British government bond prices lower. So given the fact that sterling has started to move higher, that is a slight negative with regards to FTSE, and if that does continue, then obviously I will shift my bias. But having said that, sterling should be catching a bid regardless because of real wages growing, and obviously yes, we do have inflation ticking higher to 1.3%. Okay, yesterday. Now that alone should obviously send it higher. If there are disagreement within the board, then obviously that is going to send sterling higher as well, which it can be negative for the markets. But having said that, commodities will outdo that negativity. So we have oil prices now forming a potential base with OPEC and namely Russia and Venezuela contemplating a cut in supply or some measures that are going to support the oil price from going any lower, and that's obviously considered bullish for the FTSE. So that alone, that factor alone, given the fact that the Fed was also dovish in the evening today, was still considered to be dovish, okay, and that is going to support the price of oil and or commodities in general, okay. If I just bring up a chart of the US dollar, you'll see that it is into potential resistance now. I mean, we're back at the if you bring up a daily chart, we're back at that horizontal resistance. If I bring up a 4-hour chart, you can see that we're back at that resistance level. If I bring up a 60-minute chart, you can see we're back at that resistance level. So we're back into that double top resistance. Because we're back in double top resistance, and if that resistance holds, which I expect it to do, because the FOMC minutes today were on the dovish side, okay, then because they are worried more about disinflation or deflation, okay. So if that's the fact, then that would obviously cause the dollar to go lower. That would help gold prices move higher, and obviously help commodities, etc., etc. So if I just bring up a chart of this is going to be quite interesting. If I bring up a chart of bring up a chart of oil. This is something that I can certainly discuss with you as well. And you're looking at a potential inverted head and shoulders formation here. This is your left shoulder head, and this is your right shoulder, and we're looking for a potential move higher, okay. Not only that, that's the oil index or oil and gas sector. The one that's most important really from my perspective is the Aussie. If you bring up a chart of the Aussie, if you bring up a daily chart of the Aussie, what can you see there? You have your inverted head and shoulders formation, provided obviously we hold the right shoulder. So if I take the right shoulder here, so we're into that 75% fib. So this level certainly needs to hold, and I do expect it to hold, given the fact that the Fed was dovish. Okay, the FOMC minutes were dovish. Although I have been stopped out my Aussie trade at 0.8608, unfortunately, on this whipsaw. But my bias still remains bullish, given the fact that we have this inverted head and shoulders formation on here, which again is supported by the price of gold. Now, if I bring up a chart of gold, and I'll be able to show you the pattern that's forming there. Bear with me, if I can just find the chart. That is okay. Here we go. So the same type of pattern there as well. But basically, if I look at your 4-hour chart, you should hopefully see it more clearly. Okay, so you've got this inverted head and shoulders formation. Okay, you've got 1132, you've got the 1176, so you're looking at a 40-point move. So you're looking at a potential move to the 16 or 216, 11 or 1216 area, potentially higher. Although we have stalled at this 200 MA, and the market certainly has put this bearish engulfing candle, and it's all about news regarding the Swiss referendum and their opinion on gold. So that's just a political problem, a political sideshow from my perspective. But in the long term, we are looking for a potential move higher on gold. From my perspective, given the fact that Mr. Abe obviously has introduced his QE program. At the moment, with regards to Swiss referendum news, we have retested the breakout level, and we are looking for a next move higher. Okay, so that's basically my interpretation, and that in itself should send the Aussie and Kiwi higher, which in turn will help oil prices to go higher. Copper will go higher. And obviously that helps the FTSE 100, hence the reason why I maintain my bias, which is bullish on the FTSE 100. Okay, now the daily chart of the FTSE 100 is into the 200 MA. I understand that, but given the fact that everything else has broken the 75% fib and has tested the previous high and broken out to a new high, then don't be surprised if this happens as well. So we've had our internal, we've had an inside bar today. The inverted head and shoulders formation is 6770. That will be completed by the oil price moving higher, because the oil price is now putting in a base. Okay, if I bring up a chart of oil, I should be able to show you the base that's being built. And we're looking for a projection higher. Bring up a 4-hour chart, and you can clearly see here a very similar pattern to the Aussie. Okay, and also the gold price as well. So you've got an inverted head and shoulders. So this is your left shoulder, this is your head. And then you're looking at a right shoulder here, and then obviously we're looking for a potential move higher. And given the fact that OPEC is obviously now attempting to intervene, and Russia obviously has voiced its concern with regards to a falling oil price, then this itself should be enough. Although the oil inventories data was certainly bearish for oil, and that's why we've had a potential setback. But any type of geopolitics, and obviously the dollar itself is at resistance. So given the fact that the dollar is at resistance, and we've got the Fed, which remains dovish, then obviously that means that you have a lower dollar, and obviously commodities will start to push higher. which in turn will help the FTSE 100 break the 200 MA and continue its move higher. Okay, that's going to be an interesting move with regards to the markets. Now, having said that, also, I mean, we, as traders, we always keep open-minded and be aware of every potential scenario. There is one thing that is of concern to me, and this is his H&S formation. We've had this breakout, and it could be conceived as a false breakout. Okay, so from a technical charting perspective, that's basically what I need to keep an eye out for. But the counter argument to that is that we've got the USD JPY at almost 118. Forget 117 now, almost 118. And given the fact that we're at 118 and the carry trade certainly seems to be active, and the yen obviously has a falling yen, has an inverse relationship with the US stock market, then basically we're looking to continue our move higher. Even though that H&S formation is present on the 60-minute chart, we also had one here, and that got negated as well. So, and given the fact that this is just an inside bar, and we've got a bottoming tail within that candle as well, same as a FTSE. Can you see here? I mean, forget 75% retracement on this V-shaped rally. We've actually made new highs. Hence the reason why I'm using that same thesis and projecting that same movement on the FTSE. This is only the hurdle that we have to pass. Once we pass the 6725, then your next resistance level is 6850 and obviously 6900. And don't be surprised if we do make a new high. And that new high will more than likely be based on the oil price moving higher as well. Okay, so that's something that's certainly worth considering. Now, with regards to the FTSE, its counterparts, so the FTSE 350, again we're into that same level, horizontal but previous support equals resistance, and into that 200 MA. Also looking at the FTSE 250, yes, we have had a bearish engulfing candle at that key trend line, hence the reason why I explained yesterday I was biased bearish with regards to the FTSE. Okay, now today, even though sterling is certainly upticking up to the 83 level, my swing long position on sterling is from the, I think it's around the 50 level, if I can remember correctly. Okay, and that's primarily due to the real wages growing as well, and obviously the inflation rate slightly ticking higher. But like I said, that is going to be a potential negative fact, and that's one of the reasons why I was obviously short the FTSE this morning and overnight this morning. But having said that, the fact that the BOE came out today with regards to their minutes and obviously show that they are disagreeing amongst themselves. Interest rates are there, the QE is certainly there, the bond buying is certainly there. But the added factor now that we had, the reason what caused the FTSE to fall was the commodities, and commodities are now looking like they are into support, and obviously you're building a base, and with US dollar now into resistance given the FOMC minutes today. So if you add all those factors together, then we are looking for a higher FTSE from my perspective. Okay, now let's have a look at the FTSE on a 10-minute chart now, see if we can try and work out as to what's going on here. Let's go to our 60-minute chart. Okay, so 60-minute chart, one can consider this as a potential pullback, that's all. Okay, given the fact that the market continues to make higher highs and higher lows, so therefore one would just consider that as a potential pullback, which is just generally considered healthy. Okay, so we have this support, resistance, etc. around this region. We've had this bear flag formation. That gap level certainly seems to be holding well. Okay, so or should we say previous resistance equals support seems to be holding well. Okay, now, and this obviously this trend line here certainly, although it is circumspect, but we'll keep it for now. See, I mean, it's connecting this pivot, connecting this pivot. Yes, we did obviously negate it to a certain extent, and then obviously reverse. So, and that's your previous resistance equals support as well. So, where are we? Okay, so where are we? So this is your 10-minute chart here. Okay, so these are basically your important aspects to watch out for. Okay, 8 o'clock. So you've got the gap here. The gap here is 6670 region. Okay, so we've obviously broken out of this. Let me just ignore that because I did expect that move to occur. It didn't actually transpire. Okay, right. So all we can do really is just connect your pivot highs from here. I mean, 6705 certainly seems to be a potential resistance, even especially given the fact that we've broken out this potential wedge formation. But 6705, we'll see exactly what happens. If we can break 6705, then yes, we are looking for a potential move higher. But like I said, that must be based on the premise that Asian markets are higher, commodities are higher, and that's basically what I'm anticipating. Okay, the 200 MA certainly seems to be support, and this diagonal trend line support, trend line resistance certainly should expect to hold. Okay, and that's basically what I'm looking at. Now if I use my fib and look at this previous high to low, so take this high and take this low, take it to the high, we have retraced around the 38% we held at, and we are looking to potentially make a new high, and that's based on the premise number one. Obviously USD JPY is almost near 118 now, so that should obviously be bullish interpretation there. And we have the bear with me, I've got a Skype call. Okay, so we have the fib retracement here, 38%. Obviously, given the fact that USD JPY is making a new high, and given the fact that oil prices are now potentially into support. Okay, so we're looking at it from that perspective. Okay, folks. All right. Okay, so that's basically a wrap up there. So risk on, risk off, wax on, wax off. Goodbye now.